Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has a special trade planning with options session for you to see, looking at FEZ, the European stocks, where she combines great option strategies with the askSlim charting technology. Arby has a sample of a member video trade ideas. And this is a great lesson in cycle analysis on sugar. And we have a special that we're starting right now. You could get daily content for all traders and styles for just $30 for 3 months. Unbelievable. And I'm going to bring you my commentary and analysis on the stock market. I'm going to look at the Russell, S&P 500, and NASDAQ on the daily charts.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market held up early last week as investors digested the recent run-up in stock indexes and awaited the Fed minutes and the employment numbers. Fed minutes showed that rates were expected to go up. Not a big surprise to that, and it really didn't affect the markets very much. But then Thursday morning, the ADP private sector job numbers came out, and they were unbelievably strong. And that hit the stock market because, well, that was a big confirmation that interest rates were still going to go up. S&P fell 60 points. That was very fast. And they looked really ugly, and the breadth numbers were horrible on Thursday. But then the same trend as we've seen, tech buyers stepped in, and for hours the market crept its way back. Little sell-off on the close, but still ended down only 37 points, well off of those lows for the S&P 500. Friday, the payroll numbers, well, they were weaker than expected. Stock indexes have been in a narrow range here on Friday. They rallied first, sold off, and then now are trying to rally back again here at midday. But they do seem just a little bit more sluggish, a little weaker than we've seen. For the week overall, it's mixed to softer equities, overshadowed by huge uptick in the 10-year yields. They popped over 4%, and that is especially affecting the small cap stocks, and much worse shape on the Russell than we see in the S&P 500 and the NASDAQ, and that's really the core of what I'm going to show you when we look at the short-term charts coming up pretty soon. While our upgraded target for the S&P 500 remains around 4,500, it's hard to ignore the blaring issues suggesting a sharp slowdown is coming, and that is likely to hit earnings just ahead. Employment is stubbornly strong, with wages strong also. What's happening is that there is employee hoarding going on. With all that excessive stimulus in 2020, 2021, then what's happened is that the workforce fell off. People left the workforce because they were getting all that free money, and now it's hard to replace labor at 3.7% now unemployment rate. So companies, they're just holding on to those employees, and you can thank the Fed and the U.S. government for that situation, and that, of course, is inflationary. Housing prices, well, they're moving up again, and supplies are low. And again, you could look at what was 2 to 3% mortgages versus now up to 7.5 to 8.25% for 30 years. Why sell? I mean, people, they want to move into a house and double their monthly expenses? No. So they're holding on to those houses. They'd rather not move. And the result of this extreme Fed action where they held interest rates that low for so long, we had a huge bubble in refinancing that was going on. Now people they don't want to move because of these rates. And thank you, Fed, and thank you, the U.S. government, for this situation. And of course, it's inflationary. Low supplies, high costs. But the result is that the affordability index is now at the worst level since 2007 on houses. And yes, that brought a crash at the time. I'm not saying it's going to bring a crash right now, but it sure is likely that there's going to be a significant slowdown. And when you look at commercial real estate, that's where the huge issues are there. So all of that is a major factor. And one more thing, the Fed is very stingy right now. I'm going to show you a graphic in here, but you know that the Fed has been reducing its balance sheet while it has been raising interest rates, and that is a recipe for a lot of trouble. But take a look at this slide. This is the S&P 500 versus money supply over the last couple of years, and this is thanks to Morgan Stanley, who brought this out. This is from Bloomberg, and what this shows is the S&P 500, which is this dark line right over here that you can see, and how it explodes here up into this June-July period, while the money supply here is going down and languishing down over here. It's not the clearest of graphics that I've brought you, but you can get the idea. And you could see what's happened in the past as the stock market has tracked the money supply very closely. You can see that, but now we have this huge disparity right over here, and this is those AI stocks, which is leading the indexes up, the S&P 500, while the rest of the broad index is just really not doing that well, languishing, and the breadth numbers have been terrible. So overall, you can see there is a huge, huge disparity when you look at that. And there's a big divergence right over here when you consider the very poor breadth of what's going on in the broad list. And it is creating an illusion of stock market strength. And with all the aforementioned issues that I'm showing you, well, this sets up trouble. We have very stubborn inflation, a tough Fed, and overpriced stocks led by just a few of the high caps. This is a tough situation. And I think that all of this is going to be a real recipe for earnings to be falling. And those pie in the sky, the S&P earnings at 220 or 230, it's not, they're going to have a hard time even holding earnings over $200. And this is going to be a very, very overpriced stock market, and we're going to be hearing that a lot going forward. And that's going to make that next 100 points that we're looking for in the S&P 500 very tough to come by. And certainly if it was able to achieve it, very tough to hold. Our sum of the evidence technical analysis is still positive, but investors' risk reward is not. The Russell could be giving us a warning. Of course, they don't like it when interest rates are going up, and it hurts the banks and it hurts the small caps who have to borrow so much money. And the Russell is giving us a warning that I think is important to look at. And I'm going to show that to you when we look at the short-term charts coming up in just a few minutes. For the market this week, stock indexes, small loss on the week right now at midday here on Friday. Bond market, very weak. 30s almost down 3 points. And the 10-year yield's up 21 basis points. They make it up to 403. And with everything that we just said about the conditions that we think are going to cause an economic slowdown, or maybe even recession, and certainly an earnings recession, we think rates are likely to peak very soon. You might be able to count that in minutes. Gold up about $8 on the week, and gold and silver, we still have our analysis at maybe about another month and a half of a soft markets there before we think later in the year they do better. And the gold, you can see that analysis. I want you to really look at that when you watch our Future Speak show on Wednesday. Ari does a spectacular show on that. So please do watch that. You get to see our analysis on the indexes and total of 24 different futures contracts, weekly and daily charts. It's just an unbelievable 1-hour show. Members only, levels 2, 3, and 4. And on the dollar, it's down about 0.4% on the week, and we have believed and still believe there is downside risk. for the dollar. Oil gains 230 on the week, and not exciting market there. I think it's still pretty range bound. That's it for the opening comments for the week. Please do get acquainted with our site. I'm going to show you in a couple minutes our level 1 deal, 3 months for $30. This is a great opportunity for you to get daily information. On YouTube, subscribe to our channel, click the notification bell, and like this video, give it a thumbs up. On Twitter, follow us at askSlim. And any questions you have on everything we show here or about our membership and education, write to Matt at askSlim.com. This is trade planning with options. Katie does this for our members. You need to be a level 3 or 4 member. This is just unbelievable information that she does as she combines our style of analysis with her vast knowledge of option trading using the Tasty Trade platform. And she'll show you how to sign up for Tasty Trade right through our website, so don't miss that either. She's going to look at FEZ, which is the European stocks. And this is very important analysis to see because we had looked for FEZ to bottom and help lead the equity markets moving up, and that happened. However, now FEZ is failing, and this is important information. So please do make sure that you watch this. Trade Planning with Options with Katie.
Hi, this is Katie Anagnostos, and this is a trade planning with options video on July 6, 2023. Today we're going to look at a trade idea in the Spider Euro Stocks 50 ETF, ticker symbol FEZ. First, our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's get started. Here is the weekly chart of FEZ. Again, this is the Spider Euro Stocks 50 ETF. We have a dominant 33-bar cycle that is broken down into minor thirds. You can see this very clearly. First minor third, second minor third, third minor third. So this last cycle was positively configured. That means that it ended higher than where it began. And with a right-hand translation, that means that the cycle peaked way over here towards the end of the cycle, leaving very little time for a pullback into the cycle timing window that's represented here with these blue vertical dashed lines. FEZ had a very shallow retracement, forming the intermediate low here, rallied back up to that prior cycle peak, backed off, and is now threatening to break through that cycle low support. So that is a quite negative scenario. We may get some sideways chop in here, but with negative momentum and getting back down to that cycle low support, we are watching for a breakdown in here. So here I've switched over to the daily chart. We have a large 52-bar cycle on the daily chart. So notice that the prior daily cycle low here formed right here with a subsequent move up, back up to that cycle peak from the prior cycle, and then it gapped down. We've had price action chopping around. Momentum has now turned negative. Our proprietary momentum indicator, the reversal scout, is negative, and the slim ribbon, which colors the candles red, green, or gray depending on momentum conditions, is also negative now. So this is deteriorating and now threatening that cycle low support. As we said, probabilities would favor rallies to fail in this resistance zone that we have created using this high and this low. So this is a declining resistance zone. It is going to be moving lower as FEZ moves lower. We have a daily cycle timing window that's represented again by these blue vertical dashed lines, and that is between August 7th and August 15th. So we're going to be looking at an options trade idea out in the August monthly expiration cycle. Now let's look at some important levels. The top of this resistance zone is at 45.77. Then we have the cycle low support at 43.65. This 127.2% fib is at 42.83 and the 161.8% fib at 41.70. Over here on the Tasty Trade platform, FEZ has a relatively high IV rank compared to some of the other ETFs on our askSlim focus list. It's currently 17.5 with an implied volatility of 21% out in that August monthly expiration cycle. So with a bearish hypothesis from about the 45 level down, we're just going to set up a simple short call spread. This is a defined risk strategy that involves selling an out of the money call and then buying a further out of the money call to define our risk. Now, looking at the premium in here to make it worthwhile, we're going to need to sell that 44 call. Yes, it's in the money, but only by 5 cents. Then we're going to buy a call that's further out. Let's go with this 48 call. That's going to give us a total credit collected of $1.17. So max profit is 117. Max loss is going to be the difference between the width of the spread and the credit collected, in this case $283. That is also the capital that you will have to put up to place this trade. We have a probability of profit of 65%. We pick up just over 46 short deltas and just over $1 of daily theta. Now, of course, if you have a greater risk tolerance, you could just do a naked short call. But in my estimation, the extra 4 or 5 cents in premium that you would pick up doing that is not worth an extra $600 in capital that you would have to put up to place the trade. So let's go and take a look at this on the risk graph. As you can see, no risk whatsoever to the downside and a break-even point at $45.17, which is the middle of that resistance zone from the daily chart. Now, Tasty Trade is our preferred options trading platform. Please go to the askSlim homepage, hover over the Marketing Partners tab, and click on the Tasty Trade link. That takes you to this page where you can learn more about Tasty Trade. And if you open an account through our link, that helps you with some special bonuses, and it also helps us. So please do consider checking that out. That's our trade planning with options video today. As always, please feel free to reach out on Discord or via email to katie@askslim.com with any questions or feedback.
Super work, Katie. This is Trade Ideas. Arby's going to share a sample of a member video. Again, level 3 and 4 content. Short-term swing trade idea on sugar. And he does a great cycle analysis lesson on this. So I think that you will really enjoy it. Please watch this analysis on sugar.
This is an askSlim trade idea video walkthrough for a short-term short in sugar futures. That's /SB. We are looking at a weekly chart on the left and a daily chart on the right. Let's go ahead and pull up the weekly chart. Now, you can see this really sharp move on the upside in sugar as we are clearly in this intermediate term rising phase, but we have now in all likelihood formed a key intermediate term high right here in late April, and we are in a corrective period here on the downside in sugar. There is a low that is due 731.294, so the highest odds would be that this is a bear flag that is poised to turn down one more time prior to forming that key intermediate term low. If we go ahead and shift over to the daily chart, what do we see here? Well, we see what we would call a left-hand translation that is in play due to the fact that we have now moved through this key low right there versus 24.27. That says that this dominant energy is now pushing on the downside. If we then zoom in and look at these minor cycles, you can see that there was a low that was due right around the end of June. And that's what this sell-off is. And then now this rally is that we are in a rising phase on that minor cycle with our dominant energy pushing down. Under that overall construct, the highest odds would be that we would form, as we have drawn in here, a bear flag and then look for this to turn back down. Now we are looking for this to fail from 2361 to 2417. If this were to close over 2473, that would render this idea no longer valid, and we are looking for a move to this 161.8 fib and then this low, so that's 2203 to 2181, and there is a low that is due 719 to 727. One other thing I do want to add in here is to watch carefully this slim ribbon PO. Look at these really nice signals when you're in an uptrend, right here, and here, and here, and here. Each of these led to follow through back on the upside. That is what this is really made to do, is to give you momentum continuation signals on either the upside or downside. Watch for one now on the downside. If we can see the PO move back through the overbought region, that would give a bearish signal, and then we would be looking for follow through back down. So watch this really very closely. Keep in mind that the slim ribbon PO is available for level 4 and 4 plus members at askSlim.com. And as always, if you have any questions or comments, feel free to send me an email. Thanks again, and I hope you all have a great day.
Love it, Harvey. Great work. All right, this is the special we've been talking about earlier in the show. 50% discount. Great introduction to our services, education, and analysis. This is for level 1. It's $30 for 3 months of daily information. It is incredible. You're going to get our Slimulator Momentum Tracker. This is meant for longer-term holders, investors, position traders, over 1,000 symbols with our built-in algorithms you can scan and sort in there. Our stock index report, daily technical analysis on the charts and major indexes. Matt does a superb job on this every single day. Spider ETF review, that's weekly. Our trader workbench, where you can organize, save, track your analysis. You're going to get our archive on this show, and you'll be able to go back and review the analysis and our trading style and really learn from it. The workbench is on there twice, yes. And our special member videos, where you'll get to learn a lot about what we do and videos that we put up for level 1. Plus, you're going to get access to our Discord server, and our team is very, very active on there, and our members also. Just go up to the front page at askSlim, click that Learn More button. $30 for 3 months of daily information. This is a great way to learn what we do and to get analysis, especially if you're interested in the indexes. This is just unbelievable. $30 for 3 months. Sign up for that right now, especially if you're a first timer here watching this video. All right, stock market analysis and projections. We're going to look at the S&P 500 and more. But before you do that, please do read this slide thoroughly. This tells you all about our analytical approach and information, and what that means for you and how you move forward once you do see the analysis that we share. So please do read this slide. Stock market, S&P 500. We're going to look at a short-term view. We're going to start out in the Russell because I think it's key because it has a cyclical pattern on there that seems to be dominating the S&P 500 and the NASDAQ, which I have overlaid on those charts also. So we're going to look just at the short term here right now. An important thing here when we look at the Russell is that there's an island right over here. And I'm going to go back and refer to that because all 3 of the indexes have that island there. And this is at a double top area. But before that, let's just take a quick look at the analytical style. This is the cycle bracket on the bottom. Now, this 18-day cycle is out of phase with the S&P 500 and the NASDAQ, and it is affecting those, and I'll show you that. So you can see the beautiful cyclical rhythms right in here, that cycle low here and the cycle low here. Remember, early in a cycle is when the cycle is rising, and where it peaks peaks is significant because the later that it peaks, the less chance it has to correct, and then you end up getting a positively configured cycle, which then gets you a rally after that. Here, in the case of a negatively configured cycle that peaked in the left side of the cycle, that's called a left-hand translation, and that gives you an indication that it's going to be weaker during that time frame. Usually when you have a negative cycle in here, then the next rally has trouble making it up to that high. This one equaled it, so it was a little stronger than expected, and then it formed that base. Now I want you to look closely at what's happening right over here because that's so important. We have that double top that's formed right over there and that island. Now it's getting a good rebound today, but it is very significant that it rallied up, tested these highs, and then came down and almost broke that low. If it gets below 1881, it will be a warning of an intermediate top that has formed. Now it's getting this nice rebound back, and this big break comes as interest rates pop. This one rebounds today as interest rates pull back some. So this is greatly affected by interest rates now because these zombie stocks that make up so much of this list have to borrow tons of money. And also there's a lot of financials in here. And as the financial stocks have suffered recently based on higher interest rates, it affects this index. And the reason for that, of course, is because they have these large holdings in their portfolio and they're underwater on it in the treasury market. And if they run out of cash or investors pull their cash out of those banks, then that run on those banks causes them to have to sell their treasury holdings at losses, and that causes massive problems in bank takeovers. And there may be a lot more of that yet coming out there. We don't know for sure. And I'm not certainly saying that there is, but the higher interest rates go, the more stress there's going to be on those smaller banks. So that's important when we look at this. This does look to me like it has turned over already. This cycle pattern right over here looks like a island with a left-hand translation. In other words, the timing translation is that it peaked on the left side. That leaves all of this time to decline. This is a warning for the overall stock market. Now, if it gets back up over here, it can repair itself up to that those levels. I would doubt that that's going to happen, but that does happen. Sometimes this is anomalous. I would say at least 70% of the time when we see this shape, it rallies back and fails and ends up to go lower. And that's what I think is going on right now in the Russell. So the short-term view in the Russell is overall getting less positive, not quite negative yet. Now, when you look at the Slim Ribbon PO, this level 4 indicator that we have, it just gave this resumption, this upward resumption signal, and the Slim Ribbon is still positive, as you see right over here. You could get the Slim Ribbon for free for the Thinkorswim platform by downloading it from our site. It's also on the Tastytrade platform. So if you open a Tastytrade account through our website, hopefully, then you will then be able to see the Slim Ribbon at work in there. But to get the Slim Ribbon PO, you need to be an askSlim level 4 member. And this is signaling, as you can see, another bullish resumption in here. So the key is what happens in here. Can it hold? Will the Slim Ribbon, which is now flattening out, as you can see, end up turning negative? Those are things that we're looking for in here to give us the tip off that this downturn in Russell, which looks ominous to us, is actually real. So that's what we're going to be looking for. And this key cycle right in here, this comes out to a decline out into late July. This is different than what we have in the S&P 500 and the NASDAQ. And I'm going to show that to you now as I switch over to the S&P 500, SPX. So here is SPX, and we're basically looking at the same time frame right in over here, the same thing, but the S&P cycles are different. And this cycle over here bottomed earlier than we expected. We thought it would come down another week, and a lot of people wrote to us and said, Slim, you said it was going down longer and further. Well, we don't make the rules. The stock market does what it wants to do, and this bottom came early. But then you have this island in here. Now, you see the Slim Ribbon, it is stronger than it is in the Russell, and no, this didn't get down anywhere near as far as we saw it come down in the Russell. So that is significant when we look at that. And the real risk is out over here in the S&P 500 out towards the end of July and August. That's where biggest risk is, where that big yellow zone is. So you have an island here. It's trying to rally back. It hit the minor supports right in there, and that saw that get a bounce that's going on today. Still, that island exists. It is a warning to us, and we're going to be looking at that. Here is that overlay of the Russell right over here on that 18-day cycle, and so we're going to be watching how this affects the S&P 500 and how this plays out. As usual, buying is coming in here on Friday. We've seen so much of that, but will it hold up today? Will it hold up coming into next week? Will the Russell coming down during this period right over here affect the S&P 500? It can. As long as the S&P 500 is above that minor support right over there, 43.55, then it is okay. It doesn't turn negative. If it breaks below 43.28, where that cycle low is right over there, that is very negative. That would suggest an intermediate top. It would negate our looking at 4,500 on the S&P 500. So this is important numbers. 43.55 is where that warning number is, and it's a long way from that right now. And 43.28 right now is where the breakdown would come. So in the meantime, momentum still strong. The slim ribbon PO still green and strong. The resumption signal came right on time right over there. And the slim ribbon very strong right there. And of course, the intermediate momentum conditions, and you can see that on our market condition monitor, the MCM, that they're all still positive. So like I said in the beginning of the show, our sum of the evidence on all of our analysis is still quite positive. We just have these warnings on these short-term charts, and we are heeding that. Again, the target up over here was 45.32, with a really, really crazy one up here at 4,600. I don't think that could happen, but 40, this number right there is 45.13. This number is 45.34. That is still these upside targets right over here unless we break down these numbers. So we're getting the warnings. We're with the island shape right over there. We're getting the warning on the Russell shape of that pattern. But still, overall, the sum of the evidence is positive when we look at this. And one more thing we'll look at in here is the NASDAQ. You had that island right over there. It came down to the minor supports and had no problem getting that bounce that you can see right there and is moving up. You could see here the slim ribbon even more positive than on the NASDAQ, than on the S&P 500, where it's flattening out on the Russell. And here the slim ribbon PO. Look at these upside resumptions right in here as the market keeps moving to the upside. Here's where that low was in the Russell right there, and here's where that next period of pressure could come in the Russell right over here. So we're watching that. This is an important period out over here. Will it be able to storm on the upside and give you some very big upside moves? Or will this fail and this island prove to be accurate and then move down again? That's really sums it all up when you look at that. With the Russell giving warnings, the S&P 500 and the NASDAQ still very strong. Buying still coming in the NASDAQ stocks, but still being lifted by a very, very narrow number of stocks with breadth in the market that just is not at all favorable that we have seen. Now, the breadth improving here on Friday after being terrible when you looked at it on Thursday, but still overall breadth has not been great for the market. Narrow leadership as it moves up, and some warnings. The target still in that area of the low 4,500s in the S&P 500. But there are warnings out. And if you did not watch the whole show, if you scroll forward, or if you just are watching a clip of the stock market analysis, go back and watch the beginning of the show, because my opening monologue talks about why the stock market has problems moving forward. And I think it's important for you to look at that beginning of this show also. All right, that's the end of it. Please do take advantage of our level 1 membership, 50% discount. You get all this for just $30 for 3 months, daily information. Just click the Learn More button at the top of the front page at askSlim.com, and you'll get more information. You get to learn more and sign up for just $30 for 3 months. That's it for this show. Please do explore everything on askSlim.com. Take our level 1 deal to get acquainted on YouTube. Subscribe to our channel. Click that notification bell. And like this video. Give it a thumbs up and watch our member videos and the playlists and past shows. On Twitter, follow us at askSlim. And any questions you have, write Matt at askSlim.com. That's it. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.